Hey everybody, hey traders, Chris over here. Welcome back to another installment of my Keep It Seriously Simple video series, where I'm helping traders of any ability level in any financial market trade to be more consistently profitable. Now this video is by popular request and popular demand. This is all about order types. I've had a lot of new traders come into my trading room the last couple of months, and I get this question a lot. What is a buy stop? What is a buy limit? How do we set pending orders? How do we buy or sell at market? So that's what I wanted to address in this video. So let's spend some time in the whiteboard, talk about how we look at our price in stocks and Forex. I'll go to some broker platforms as well. And let's talk about market buys and market sells. Let's talk about pending buys and pending sells to make sure that we understand where we buy and sell and how those order types work. Okay, so let's talk about buying. So let's say that we want to buy Amazon. So Amazon, let's say it's trading at $2,400 per share. Okay, now Wall Street is open from 9:30 a.m. Eastern Time to 4 p.m. Eastern Time. So we can trade inside that window. We can trade from the hours of 9:30 to 4. That's when the market is open. If it's pre or post market, there are price feeds you can look at. There are price levels and technicals you can look at, but we as retail traders are not getting filled at pre and post market prices. We're getting filled while markets are open. So let's say that the market closed at $2,400 a share, and you and your broker platform want to buy at market. Okay, so you're going to look at an order type of a market buy. Okay, now what's going to happen is when the next day opens, whatever that price is that it opens at, you are going to get filled at the best available price. So let's say that the market gaps higher. Let's say that the open is at $2,405. Well, your order's in at $2,400. The next available price is $2,405. Your fill is at $2,405. Okay, that's not a spread or anything like that. That's just you're getting filled at the next available price. Okay? If it was the opposite, where you wanted to put in a market buy and the market opened and it gapped lower, let's say it gapped to $23.95, you get filled at that next available price, $23.95, which is good. Okay? Now, let's say that it's during normal trading hours. If you're looking at live price at $2,400 and you put in a market buy, if liquidity is there, which it probably is for a high volume stock, you can get filled right at $2,400 with a market buy. Now let's do a quick Forex example using something that we've all heard of, the pound US dollar or the sterling versus the US dollar. Current price we'll say is right here, and it's 1.3050. Now that's the current price you see in your broker platform. That is the bid price. Okay, now most retail brokers charge a spread. Now there could be a raw spread where it's a fraction of 1 pip, or there could be a built-in spread like a 2 pip spread. The way that I trade, I've usually just had built-in spread so I can cover that built-in spread and just trade to be profitable. So once I cover that 2 pip spread, I know that I'm break even or better, versus sometimes it's a little sneaky because I could have a raw spread at 0.5, and that means when I go to 3050.5, I'm break even, but then the broker also charges me an exit commission, and I end up losing money on that break-even trade. So like I said, I like to just have it be built in, make it easier. My 2 pip spread, if I cover that spread, I'm getting paid on the trade. Okay, so 3050 is the bid. If the broker's charging a 2 pip spread, 3052, that's going to be the ask. So if this is real-time price and you put in a market buy, hopefully you can answer this question. If we put in a market buy at 3050 and you pay the spread, where are you getting filled on the trade? You're getting filled the ask. So in your broker platform, you're going to be filled at 3052 on that pound US dollar. That would be a market buy because we're covering the spread. Okay? Now let's do the same thing if we wanted to sell. Let's take this pound US dollar and let's do a market sell. Now, not to confuse anybody, but we would be looking to sell, and guess what? if we have a sell trade at market, we're going to get filled at 3050. Sweet. I don't have to cover the spread. No, you do. What you have to do instead is now you have to cover the spread here, and this is where your break-even point is. Right? You still have to cover that spread. So you're getting filled at 3050, but in order for you to be in the money after getting through that spread, you have to be at 3048 or lower. Okay, so you can have a market sell at 3050. As long as price is below 3048, you are in the money. Okay, so because of the spread, it can make Forex a little trickier, but again, market buy, market sell means I want to buy it right now at the next available price, the best available price right now in a liquid market. All right, so market buy, market sell means we want to get in right now. Now, let's talk about pending orders. Okay, there are two types of pending orders. Pending orders. Actually, there are three types. I actually don't talk about one very often, but I will for the sake of this video. Pending orders. Okay, we have buy stops. We have buy limit. And we have OCO. We also have sell stop. We have sell limit. And this actually goes hand in hand. We have an OCO. Okay? Now, let's talk about buy stops and sell stops. And then we'll talk about buy limits and sell limits, and then we'll talk about OCO. All right? So a buy stop is going to be this. Let's say that this is current price. This is current price. So we'll use the pound dollar again, 1.3050. Current price. Now, let's say that we believe that price is going to go, or it's already in an uptrend, and we're trying to get some of this action without, getting messy. Let's just buy a breakout. Let's say price is really choppy around 3050. Let's just let price break above it. So we're going to put a buy stop right here, 1.3070, and we're going to target 1.3100 with a stop loss below 3050. So if we get filled at 3070, that allows us to take a trade. We're going after 30 pips. We're going to risk 20 pips. It's a decent surplus. It's not bad, 1.5 to 1. So if we win, fantastic. If we lose, we go find another trade. But here's the catch. A buy stop means that price, if it's currently at 1.3050, price is going to be moving up. Okay? Price has to move in the direction that you want that buy stop to get filled. Now, because there's a spread involved, technically, if we still have a 2-pip spread and price moves up to 1.3068 and we have a 2-pip spread, we are going to activate that buy trade at 3070. All right? Now, when does that get tricky? You're like, well, it didn't actually go to 3070. I don't want to get in the trade. Well, if it's a 2-pip spread and it's moving up from 3050 to 3068, I would hope the continuation is we're going to take it up to 3100 and we'll just get in the way, right? We're just going to be in the way of the trade. So we can get filled on the spread. We're going after 30 pips of profit. We're risking 20 pips here. If we win, easy peasy. Okay? So it's a little bit of a surplus. We can get filled at 3070, even though the bid price would be at 3068. Does that make sense? The reason why is because of that 2-pip spread. Now, in the event of a high impact news announcement, in the event of 5 p.m. rollover, in the event of Friday end of week when the market closes and spreads increase from 2 to 10 or from 20 to 50 on some of those exotic pairs, we have to be careful on some of those buy stop or sell stop orders. Okay? Well, mainly buy stops because the spread is what will fluctuate. So we want to be careful, but for the most part, a major pair, a major or cross with high liquidity, all right, and typical denominations will not have crazy high spreads. You might see the pound US dollar go from a 2-pip spread to a 10-pip spread, but if we're spacing it out here, we should be safe and everything's fine. But again, what is our strategy here in this case? We see it's really choppy. We don't want to guess because in case 3050 is resistance and it goes back down, we're going to make sure that price proves that it wants to go up. All right, so we'll put a buy stop at 3070, target 3100, risk below, and let's win that trade. Okay, now let's flip that around. Let's go with a sell stop. Okay, let's go with a sell stop. We'll say that price is currently at 3050. So 1.3050. Right? Let's say that we're in a downtrend. Let's say that we're looking for some continuation. Let's say that this is a great rejection point. Well, we can do this. We can put in a sell stop below current price because we want price to continue going in that direction. So 1.3030 will get filled if price continues to go lower. All right? And if the bid, which is currently 3050, if that bid price goes down through 3030, we get filled at that level. And from there, we are looking for our profit level. Let's say 3000. All right, and our risk would be up above. So we have, again, a 20 pip risk for a 30 pip reward. And the probability is that continuation will take us down into those zeros. We make some profit. That is a sell stop. Again, understand, a buy stop means we're placing our order above current price. A sell stop means we're placing our order below current price. And price has to go in the direction of your order to take you in. Okay? That is a buy stop and a sell stop. You will see that in your broker platform, especially when it comes to trading Forex, trading cryptocurrencies, when it's a liquid market and you can easily buy and sell. Okay? A buy limit and a sell limit. This is where we get a little bit more sophisticated in our strategy. Let's talk about a buy limit. Let's use the same example. 1.3050 is current price. Now let's say that this just got off of a really large run to the upside and we have a nice trend. What we're telling ourselves is, you know what? I believe we're going to 3100. So I want my profit level here. But rather than buying the highs, rather than buying a breakout, what I'm going to do instead is I'm going to look for a pullback, and I want to buy this thing at 1.3025. And I'll put my stop loss at 1.3000, right? Hope you can see that. If it's cut off, listen to me. 1.3000. So now look at the difference. If we were to get filled with a buy limit, that means we're setting our order below current price. So essentially we're buying the dip. We're buying the pullback, okay? So if current price is 3050, 3025 would be my buy limit. Now again, because we have a bid and we have an ask, if we want to get filled at 3025, that has to be the ask price. And if we still have a 2 pip spread, here's what it means. That means that actual price, the bid price, has to go down to 3023, and then we can get taken in on that trade. Now here's the cool part about buy limits and sell limits. Look at our risk. We would risk 25 pips to buy the dip and go after 75 pips in reward. Very easy to set some really nice surplus trades where our reward is much bigger than our risk. Yes? So that is how a buy limit works. We're going to set our pending order, our buy limit, below current price so we can buy the retracement, buy the dip, buy the pullback. Good? Okay, let's flip that around. Now, price again is at 3050. 3050. And we've been coming off this great little trend to the downside. Now, rather than selling below current price like we would on a sell stop, what we're going to do instead is we're going to put a sell limit at 1.30. It's got to be higher, 75. And that way we can sell the retracement. We can sell the pullback. We can put our stop area at 3100. And we can put our take profit at 1.3000. So we have a 25 pip risk for a 75 pip reward, 3-to-1 surplus. Looks pretty good, right? 3-to-1 reward to risk. So we're going to sell the pullback. And in the Forex market, in these highly liquid markets, Buy limits and sell limits are your friend. That means that you're never chasing the market. That means you're never reacting to the market. There are times that I do place buy stops and sell stops because I believe that price is just going to go to that profit target and that destination. But I will also take, and I prefer to take pending orders with buy limits and sell limits. Make sense? And the reason why is it's much easier to plan this trade out, allow for the market to remain liquid and efficient, and sell a retracement, sell a pullback, buy a retracement, buy a pullback, and set up those surplus trades so your reward is greater than your risk. Okay, so buy limit, sell limit versus buy stop and sell stop. If you want to see more on this and you want to see about adding to winning trades, check out that video in my series, Add to Winning Positions, because I talk about all the stuff in addition to why I use buy limits in conjunction with buy stops when I really like a trade, or sell stops and sell limits when I really like a trade. All right? And then lastly, this other pending order that I don't really use a whole lot. In fact, my MetaTrader 4 platform that I'll show you in just a second, I don't even have this option. I did when I first started trading. OCO means one cancels other. Okay? So this was very popular. It's still available on some broker platforms, but this was very popular for straddling. Right? For example, current price. We'll just keep using this 3050. There's a news announcement coming. What are we going to do? Well, let's put a one cancels other, which means if price shoots to the upside and I get filled on a buy trade, it will cancel a sell trade to the downside. So if I was going to buy here and I'm going to sell here, and one of these gets activated, it will activate this trade and it will cancel this trade. Okay, now with each of these trades, if you buy it here, you can still insert a stop loss and a take profit. You can insert a stop loss and a take profit. So in the event that your sell trade is triggered first, it's going to cancel that buy trade. Now, I am not a huge fan of one cancels the other because I'm not a huge fan of straddling the market. And the reason why is during news events, because the spreads typically go higher, I don't like to see this. The news creates a higher spread or creates a spike up or a spike down to get those trades filled. If you don't cancel the other, it's easy to see like the stop loss is there, the stop loss is there. It's just a mess. Like I swear, if you watch enough news trades in the markets, especially in Forex when you have an economic calendar, if you watch enough news trades, you will see that the market likes to just spike up, spike down, and then sit right where it started. Right? And it gets more and more difficult to trade the news with a straddle type strategy. So I don't do it. I don't trade a lot of OCOs. There are plenty of trades. In fact, 99% of my trades are going to be buy stops, buy limits. Right? That 1% may be an OCO, but most likely it's going to be a market sell if I'm actually at my computer at the right time placing a trade. Okay? So pretty detailed, but pretty simple explanation. When you go into your broker platform, understand this terminology, right? We have market buys, market sells. We have buy stops, sell stops. We have buy limits, we have sell limits, right? The best setup, in my opinion, because I don't like to chase highs or lows, the best setup is to use and become very familiar with buy limits and sell limits, right? That's allowing you to set up those really nice surplus trades. You can buy the dip, you can sell the retracement or sell the rally, and go after that surplus where you're going after more in reward than risk. Okay, so that is order types. Depending on the length of this video, I might do a part 2. In fact, I'll do that. We'll go ahead and cut it up here. This will be part 1 on the whiteboard. Part 2, I'm going to go into some broker platforms, and I'll just walk you through a couple of buy stops, buy limits, sell stops, sell limits, or market orders in a broker platform for Forex, for stocks, for cryptocurrencies. And I'll see you there. All right, hope you enjoyed video 1, order types, really important stuff. Very simple stuff. But if you can't go into a broker platform and navigate that platform to properly buy or sell or set your orders up, you at least need to start there before you start placing trades. Okay? Happy trading, everybody. Lots of profits. Take care. Bye-bye.